Caesar Capital. Hope you're well. It's the 1st of June 2024. We're going to look at three bullish continuation patterns today for Bitcoin. Each of them has a different target, but the first two are on a daily time frame, and the last one, which is a much higher target, is on a weekly time frame. Now, of course, weekly time frame patterns take longer to play out, whereas daily time frame patterns are shorter in the way that they play out. But equally, all of these patterns might take some time to play out, but obviously the weekly time frame pattern or continuation pattern will take, of course, a lot longer to play out. And I must warn you, the weekly time frame continuation pattern that we'll deal with at the end is extremely high target. I'm not sure whether Bitcoin can get that high, but at the end of the day, it's a genuine target. So try not to fall off your seat when we get there with that target. Okay, so let's look at the first one. The first one is an inverse head and shoulders pattern, and this is the daily time frame on Coinbase. And I find it easier to identify inverse head and shoulders patterns by essentially inverting the scale of the chart, so flipping the chart upside down. And I find it much easier to identify the pattern by looking at it on an inverse scale. So easy to do. Just open your tools, go to the head and shoulders, and then it will be quite easy for you to identify where the left shoulder is. Of course, it's here. It's clear where the head is, which is a little bit higher, of course, where the neckline would be, and where the right shoulder would be. So that kind of makes it a little bit easier for me. Then you can invert your chart back, and it's a little bit clearer then when you are looking at it from a chart pattern perspective. So we can see here we've got this inverse head and shoulders. Now, of course, a head and shoulders pattern is a bearish pattern. And again, if we invert the scale, we can see how this was a bearish pattern. So we've got the left shoulder come out, the price coming up, then pulling back, then the price continuing higher. Then the left shoulder, everybody gets a bit excited, then it comes back down again, then the price comes up, fails to break the price around the head, and then comes down, breaks the neckline, okay, and then that's your sort of confirmation that there is a bearish chart pattern playing out. However, because that is inverted, this is an inverted head and shoulders pattern, which is a bullish continuation pattern. Now we can see the left shoulder, the right shoulder, and the head, and we can see that the price came up, broke the neckline, which is the validation of the trade, came up. Now it's come back down to test the neckline. Now, an invalidation of this trade would be a break of the neckline, at least on these candle bodies, which is about 66.8, up to the wicks, which is about 67.2. So let's say 67K. So any meaningful higher time frame close below 67K would be a bit of a warning sign to me that this chart pattern here has been invalidated. Okay, so what we're looking for is for invalidation is the price drops below the neckline and closes below the neckline on a higher time frame basis. So technically a weekly time frame basis, really. You can see here wicks coming below it. Wicks are fine, but anything closing below on a higher time frame basis might be a little bit of a red flag and could well invalidate this chart pattern. But anyway, we're holding on in there at the moment at 67,630. We're very close to the bottom or the top of this neckline, rather. So it'll be interesting to see what happens over the next few days or so. But that being said, this is, in my view, a legitimate pattern, and it should be certainly considered if you are trading or indeed just investing. So the way to measure the measured move from an inverse head and shoulders, or indeed a head and shoulders pattern, is to measure from the top of the neckline to the top of the head. Then you take that measurement and you simply put it on top of the neckline, and that gives you your measured move. Now, the measured move for this move is 80K. So 80K is the target. So if Bitcoin can hold 67,000, it can drop below 67,000 as long as it's a wick, it doesn't matter. But as long as it doesn't close below on a higher time frame basis, 67K, then technically the target is 80K. So that's the first target. So that's our first bullish continuation pattern. The second one is again on the daily time frame, but it's looking at this chart in a slightly different way. Rather than looking at it as an inverse head and shoulders, I suppose it's arguable to look at this as a cup and handle. So taking the price point here of April 24, and then the price point in May 24, we bring the cup down. You can see the price has created this nice cup, and then we have the handle, which is to the right of the chart pattern. So essentially the price coming up, dropping down from 71K, coming all the way back up to 71K, then consolidating here in this handle, and then hopefully breaking to the upside. Now, a confirmation of this pattern would be basically a break above the 71K mark. So we'll wait and see if that happens. But the way to measure a cup and handle pattern is very similar to the head and shoulders pattern, in that you simply take the measurement from the top of the cup down to the bottom of the cup, or where the price stopped, which was 56K on this occasion, and then you simply take that and you place it again on top of the cup, and this will give us a slightly more bullish or higher target of a little bit up around about 90K. So that's the second bullish continuation measured move of 90K, the first one being 80K, this one being 90K. Now, here we go for the slightly more, or I should say, extremely more bullish pattern. Let's take a look at Bitcoin on the weekly time frame. Now, as I said right at the beginning, any sort of weekly time frame chart patterns are going to take significantly longer to play out than any sort of daily or 8 or 4 hour time frame chart pattern. So this is Bitcoin now on the weekly time frame. So we've zoomed out a bit and we can see our high here back in November 2021. Then we've got our low in November 22, and then the high made in March 24. Now, again, this is a cup and handle pattern. Again, we'll measure it in a similar fashion, but I don't want to be go overboard. So what I'm going to do is I'm going to measure it from the candle body closes rather than the wicks. So candle body closes, we'll bring it down to the bottom. That's our nice cup. Now this is a really nice cup here. And then we've got the handle on the right-hand side of the price action, or the cup, creating a lovely handle. And of course, the way to measure this, again, is the same as we measured the last cup and handle pattern, from the top of the cup. Now, again, I'm not taking into account the wicks. I'm just taking into account the candle body closes rather than the wick. And I'm going to take it down to the candle body close at the bottom as well. And we're going to put that on top of the cup. There you go. And don't fall off your seat, please. But this is the measured move of the weekly cup and handle pattern, depending on how you draw it. But, you know, 271,000 US dollars. Now, I'm not saying this is going to happen, but this is a legitimate chart pattern, okay? And this, you know, it looks pretty clean to me. And it's quite possible that Bitcoin could reach out to this particular target. If you wanted to measure it in a slightly different way and make the and bring the cup up to the top of those wicks like this, bring it down a little bit. We'd have to measure it. It would be a little bit deeper. So it would come all the way down to here. Place on top, slightly higher target of around about 300K or so. There you go, 299K or thereabouts. Depends how you draw it, okay? But the first one was a slightly more conservative target to this one. But hey, 269.70K or 299K, there's not a huge amount of difference. But obviously, this is an extremely bullish target. Whether Bitcoin can reach this target, I don't know. But actually, if you look at it in the grand scheme of things, it's in fact a diminished return from the last cycle, because if we measure from the low of the last cycle back in December 2018, $3,152, to the high of 69,000. That was a move of 2,100% to the upside. Now, if we do a similar measurement from the low of the price back in November 2022 to our target of just shy of 300K, it's in fact a 1,847% move. So the low from here to the high was about 2,052%, and the move from the low here to the high of 300K is 1,847%. So whilst it's not a huge diminished return, it is a diminished return of, you know, about 200% or so. So, you know, it technically is a diminished return. So anyone saying, oh, you know, but if we went from 15K to 300K, that wouldn't be a diminished return. It would be a diminished return, but it wouldn't be, you know, a huge diminished return. But technically, it is actually a diminished return. And then actually, then if you look at it a bit closer and think to yourself, well, okay, well, if it goes to 300K and then it comes back down and tests the all-time high, okay, which quite possibly do, what would be the percentage drawdown at that point? So measuring from the 300K mark or so down to the high, it's about 77%. So, you know, that is actually quite normal for Bitcoin, having a drawdown of 77%. So, you know, the more you look at it, the more it seems actually technically possible. But, you know, I'm not a moon boy. I'm not going to sit here and tell you Bitcoin's going to 300K. But this is a technical, legitimate target. And I'm just here to show you these things, and you can make of that what you will. Anyway, I hope you enjoyed this video. I hope you didn't fall off your seat. If you want to join the group, then link is in the description. It's $499 for a full 12-month premium membership. Or alternatively, you could reach out to me directly on Twitter and we can get you into the group. Okay, thank you very much for listening, and I shall speak to you soon. Thank you. Bye-bye.